All right, so I just want to ask you, start off, where do you see the Fed this year? Do you see 2 rate cuts? Do you possibly only see 1 rate cut? And we have a number of economic reports coming up this week. How do you see that influencing both the market and the Fed outlook?
I think that's the big question for investors right now regarding the rate cuts. And we see 2 to 3 right now with the recent positive economic data that's been coming out. We think that the Fed is more likely to stay on the sidelines a little bit in terms of versus more rate cuts. And with the data coming out this week, we also think it's just going to support this idea that the economy is on very firm footing and they don't want to go too far, too fast and risk inflation, as you mentioned earlier, picking back up again.
All right, so if the economy is on strong footing, why does it seem the market has flailed a little bit since we got that indication from Jay Powell during the last Fed meeting that he's a bit hawkish going forward? If the economy's strong, wage growth seems pretty strong as well. I know you're very bullish on consumer discretionary. Why are the markets kind of faltering in this last couple weeks?
Well, I think to a certain extent, it's just climbing this wall of worry, which means that they're going to go up, they're going to come back down again. And really what's happening here is they're trying to get some understanding around what policy is going to be. So it goes beyond the Fed. It starts to get to what's going to happen with immigration policy, what's going to happen with trade policy, and which industries and sectors are going to be impacted by that. And I think that's what the market's really waiting for here. The Fed is important, but policy is going to drive much of this as well.
All right, let's talk about the sectors that you're bullish on. I just mentioned consumer discretionary. As we look at that sector going forward, we get a number of economic reports they're going to talk about, or give us some insight, I should say, in the job market, also possibly the Fed's path forward. Is there any one of those reports this week that's especially important to you when it comes to your bullishness on consumer discretionary?
I think the jobs report will be critical on Friday. I mean, I think we find out what exactly is going to be going on underneath as it relates to labor. And as we've talked about many times over the past year, the unemployment rate has remained low. And what we're hearing from CEOs and CFOs is that companies are not actually laying people off as much as they're pausing hiring. And so what we'd like to hear is that narrative continue and that these CEOs and CFOs continue to want to hire. They're just waiting to get a little bit more clarity on the policy front.
All right. One other question for you, the bond market, especially with these questions about the Fed's path moving forward. Do you see the bond market being attractive? A lot of talk last week about the bond market once again becoming competition for the equity market. We talked about a lot of that money in money market funds not coming off the sideline as a lot of people forecasted, thinking that would be another tailwind for the market.
We think it's going to be a clip your coupon type of year. We think that the bond market will generate returns that are pretty average. We don't want to take too much risk there. We want to skew to quality. We don't want to take on too much credit risk because we've seen over the last couple of years that high yield, lower quality has done well. But we still want to have some exposure to other assets classes within fixed income just to diversify.